Welcome to the Transparent FX Academy. I'm Nick and I'm a top author in trading with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about EURUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. Now, starting from the monthly time frame, what we can see is that we have a market which at the moment is testing a quite significant level of monthly demand and support. In fact, from here, multiple rejections to the upside were created, and we can see how at the moment the market is testing exactly the same zone from which all these moves to the upside were created in the past. So we could expect some bullish price action to be created away from this level, as already happened in the past every time that the market tested this zone. Now, if we drop down on the weekly time frame, what do we see? Well, from a weekly standpoint, things get quite interesting as well. In fact, we can notice how we first had a very strong impulse to the downside. Then we had this horizontal accumulation phase in which we had horizontal price action. And usually, if you have a move like this after a downtrend, essentially, this means you had an accumulation phase in which institutions started longing the pair, and then usually have a move higher, then again a horizontal distribution in this case is called, and then a continuation lower. This is one of the most natural movements of the market, which is accumulation and distribution. And in fact, I did make a full tutorial on this if you want to check it out in the tutorial playlist. Now, continuing with our analysis here from a weekly standpoint, what we can see is that the market is currently testing previous weekly resistance, now turns support. This is the high of that range, of that accumulation phase. And usually when the market goes and retests the high of the accumulation, which in this case is previous weekly resistance turn support, you would expect after that a rejection to the upside away from the level. Now, if we extend this level to the left, we can see that also in the past, this was a quite important structured zone for this market. In fact, it was clearly acting as support here, preceding all this rejection to the upside. And as the market is now approaching it again from above, we could definitely expect a potential move higher away from this level. Dropping down on the daily time frame, what do we see? Well, from a daily standpoint, I did speak about EURUSD a few times in the past. I spoke about it when the market was here. I explained all the reasons for which we could expect this move higher. Then again, from here, I explained all the reasons for which we could expect this correction. And in the very last analysis, when the market was here, I explained all the reasons for which we could expect this move lower, which is in fact exactly what the market is currently giving us. And by the way, I will link in the description all these previous analysis, so you can go and check them out for more free education. Now, continuing here with our analysis, before I continue here with the technical side, I first want to go and see what we have when it comes to the commitment of traders. So the COT data, which is essentially what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. Now, what we can see here is that with the last reports, we went from having 75k net positions all the way up to having 85k net positions. So clearly, institutions are moving to the bullish side of the euro. Now, keep in mind that all currencies on the spot are traded against the USD. So if you're checking the data for the euro, you're actually already checking euro USD because all currencies on the spot, as I just said, are traded against the USD. So euro USD at the moment is getting quite strong from an institutional perspective. Now, With this in mind, let's go back to the technical side of this market. Now, here on the daily, we have to identify a clear break of structure. In fact, this zone was acting as previous daily resistance here, and again resistance here, and the market has now broken above this level. So all this previous resistance is now turned support at this zone. And as the market is testing previous resistance turned support with net positions increasing, what we could expect inside of a support area is to see more institutional longing. And at that point, that would further increase the probabilities of a potential move higher away from this zone. We can also notice that from a pattern standpoint, we have a clear impulse and correction. And in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 0.32 and 50% Fibonacci retracements lining up exactly inside of this area, creating a confluence of support inside of this zone, inside of which, as I just said, there is definitely good probability of seeing some institutional longing that at that point would push this price potentially higher. So how we could be approaching this potential move higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing potentially is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential move higher for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll down here past the testimonials, you will see that you have the possibility to join in order to gain automatically access with the email and password that you will create during the checkout process. So I really suggest that you go and check it out at transparentfxtrading.com. The link is both in description and in my bio, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos, and I will see you in my next breakdown.